So my name is James Booker. I am the owner and founder of B2BFinance.com. B2B Finance is a specialist commercial finance brokerage. We have 36 brokers as part of our team, and they're supported by 5 support staff. We are fully FCA authorised. That gives us whole of market access to around 240 different lenders. A little bit about my background. I am actually also a Sykes property holiday let investor. I've owned a holiday cottage since 2010, so I've had the pleasure of 13 years of holiday let ownership with Sykes. During that time, I learnt that there was very little in terms of support around mortgages for property owners within Sykes. And as a result of a discussion with the Sykes board, we have created an exclusive relationship between B2B Finance and Sykes to help support those owners in accessing finance and growing their portfolio. Most people think that you need to be a homeowner to get a holiday let mortgage. You don't. You can be renting and you can still invest in a holiday let property. People also believe that you need to be a buy-to-let property owner, have some sort of existing buy-to-let portfolio. That's not actually a requirement either. So you can technically have no property experience and still be eligible for a holiday let mortgage. Household income is a factor when you're applying for a holiday let mortgage, and lenders just want to see that you have the income to cover your living expenses and hopefully some surplus income in order to cover some voids in your bookings if they occur. But household income isn't actually assessed, but typically lenders are looking for 15k or more per annum. Maximum age can be up to 85 or 90 years old. The lenders do account for any junior owners that are part of the transaction, and the loan can be based upon the junior owner's age to extend the mortgage term. But 85 to 90 years old is usually the maximum duration or endpoint for a mortgage. Loan sizes vary from a minimum of 30,000 and go up to, for most lenders, 2 million. Although there are lenders that will go on to 5 million and there's lenders that will go even further than that. Minimum EPC values is considered to be E. Lenders will take a view if the property is G or H, if there's a plan to bring that property up to an E during the first part of the mortgage. Personal use restrictions is a big criteria point. Lenders do place caps on the amount of time that you can spend at the property because the property isn't intended to be your permanent residence. Those caps typically range from 30 to 90 days. The max number of bedrooms that a property can have within it is typically 6 for most lenders. There are lenders that will lend on properties with bed counts of greater than that, but that does reduce the number of lenders in market. Restricted planning use is another criteria point that knocks out quite a number of lenders. If a property has a restriction to be only used as a holiday let, then it can't be repossessed and sold on the open market. It could only ever be sold as another holiday let. And that's a big risk factor for a lender. So restricted planning used for holiday let activity can be catered for, but it cuts down drastically on the number of lenders that will lend against that property. If you're an expat, you can get a holiday let mortgage. In fact, if you're a foreign national who's never stepped foot in the UK, you can get a holiday let mortgage.
Hi, my name's Jo McCarthy and I'm a broker at B2B Finance. I'm also the dedicated contact for Sykes Cottages. So at the moment, the cheapest personal holiday let mortgage rates are around 5.8% for a purchase in personal names. If a client was to purchase in a limited company entity, the rate would be around 6.5% as we speak today. So in terms of remortgage rates for holiday let lenders at the moment, we would see those around the 5.5% mark. In terms of remortgage rates for holiday lets, we would see them for limited company borrowers at around 6.3%. The rates in this video as at Friday the 26th of January are accurate. However, for an individual personal recommendation and pricing, please click on the link below and we'll be happy to assist. So as the approved broker for working with Sykes Cottages, we're able to utilise our buying power with Sykes in order to approach lenders to achieve exclusive deals with them. These may involve a reduction in the lender rate or the lender fee, and as with all the cases, we do not charge a broker fee for all our Sykes clients, saving £495. How you would look to approach us is via your Sykes account manager, who would have provided you with some indicative figures for what you could expect to receive in terms of rental income on your holiday let property. Once you've done this, you'll be encouraged to press a link via the Sykes website, which will then send an introduction through to myself and the team. Once we're able to pick that up, we'll make a call to you to discuss your personal circumstances, and upon receiving that information can then provide a quotation and then proceed through to application, valuation and subsequently completion of your dream property. In order to obtain an offer of finance, we require a mortgage letter. This is from Sykes Cottages and will be supplied by your contact there or via the website. This letter includes within it 3 figures, a low, medium and high rental estimate for the property you're looking to purchase. Once we have this, we can then take this and make calculations and then look at lenders that can then lend on that basis. The first thing that you'll look at when obtaining a mortgage are the rates. These are available via ourselves via the links below, or you can also go to the comparison page via Sykes. This will enable you to then discuss with our broker the most suitable product to meet your needs. The process of applying for a holiday let mortgage is, first of all, click the link below. This will enable us to receive your personal information and then be able to call you quickly. We will then call you to discuss your personal requirements, and also at that point, please have the Sykes mortgage letter available. Once we have that information, we will then take that and come back to you with a quotation based on our discussion. Once we have that and you are happy to proceed, we will then proceed to offer in principle stage. This then gives the security to the property seller that you are able to secure a mortgage loan. Once you have this and are happy to proceed, we will then go to valuation, and then subsequently, when that is back, we will then produce a formal offer via the lender. We will then instruct solicitors who will work towards completion, and at that point you will then exchange contracts and move forward with Sykes on your holiday let property. So after that, we would then look at preparing a quotation based on the amount that mortgage letter can calculate. The way we would calculate that is by using those figures and typically a 30-week average. Once we have those figures, we then use a magic calculation with the lender and can then formulate an amount that you can borrow. Once that has been done, we can then progress to full application. The application process at the moment takes 1 to 2 days. We have simplified processes with our lenders, and this means we can streamline the process to make it as easy as possible for you. In terms of documentation that you may need when applying for a mortgage, fundamentally this is the mortgage letter from Sykes. This actually enables us to calculate, based on those projections, how much the lender can offer you. There may also be other supporting documents such as tax information, known as an SA 302 if you are self-employed, or pay slips may also be requested. Once we have that mortgage letter, I think it's really important that the customer knows that upon that information we can then calculate their loan amount. This enables them to decide whether or not the property is going to be viable for them, but also for the lender going forward. They make very stringent checks So the lender will make very stringent checks on the affordability before proceeding to offer. What we tend to find when the referral comes in from Sykes is that the borrower is already very informed and prepped to apply for their mortgage. So Sykes have already discussed the potential property with them and given them the indications on what that will actually yield for them. So our job is then to be able to realise the dream of that property by then facilitating the mortgage loan to enable them to do it. If you have not already spoken to Sykes, please do so via the links below or the contact details. I would tend to normally say that with holiday let lenders, it's a very specialist niche market, which is so important to have a broker on board with you. If you have that broker by your side, they will ensure that they are picking the right product for you. If you were to go to the market and look at it yourselves, you would find that there are so many different products and criteria. By working with us, we're able to funnel that down very quickly to enable you to then progress to offer very quickly and secure the property. I think the main thing is the speed of process between the offer on the property, securing the decision in principle, the property coming off the market, and then moving forward. We tend to find that this process from application to completion is very smooth and normally takes 30 to 45 days depending on the circumstances. And I think that's really testimony to the relationship we have with Sykes, that we're able to get the mortgage letter from them very promptly, be able to calculate for our lenders, and the lenders having that knowledge that Sykes are also involved. It gives them a lot of comfort because Sykes are one of the largest providers of holiday let accommodation in the UK. Some people find that they have buy-to-lets in their portfolio already, that maybe they have a standard tenancy agreement on, or they have holiday let that they already own and have no mortgage. They then may think that they want to expand the portfolio as their properties with Sykes have been doing so well. They then look to finance against those existing assets. As a broker, we would look to raise funds against them based on the income, whether that's on a standard tenancy agreement or using the holiday let income that they already have. They can then take those funds and put them down to purchase additional properties. They may also have a main residence which has a small mortgage on, for example. They can then utilise that property to raise additional funds against to enable them to utilise for business use to purchase more holiday lets. I would advise somebody that was looking at venturing into the holiday let market for the first time to take that step forward. By working with a professional team at Sykes and at B2B, we're able to support that. If you already own a property, we can look at your first holiday let, or if you're not a homeowner, we can also assist. So in order to raise funds, we would look on the purchase that they were actually looking at. So in that scenario, they would raise their funds elsewhere via savings, and then they would look to take a mortgage out as a non-homeowner for holiday let purposes. So in order to grow your holiday let portfolio, I would first suggest approaching Sykes, who can then give you projections on your potential purchases. Once you have that information, you can then come to ourselves looking at your existing portfolio in order to leverage more cash. Once you've done that, you can then inject that into another holiday let property. For your Sykes mortgage letter, please contact the Thinking of Buying team on the contact details below. Sykes and B2B have married together to create an exclusive relationship whereby Sykes will refer their clients to B2B in order to facilitate a mortgage for them to purchase their dream property.
Holiday park settings, it's another interesting area for investors. Holiday park settings are very popular for visitors with shared communal facilities, but actually getting a mortgage on a property on a holiday park is very difficult. If the property is sat on a freehold parcel of land and you have access to that land and the services that supply that property are all part of the freehold, then yes, there are mortgage providers out there that will lend against that property. Non-standard construction. flavour of the month at the moment is lodges and timber frame constructions. Some of those are mortgageable. However, the more prefabricated mobile home-esque properties, they are not. They tend to be on leasehold plots, and they tend to be, as I say, prefabricated and therefore unmortgageable. It doesn't mean to say we can't obtain funding, but it's down another route which is classed as asset finance, and those loans are typically over 5 or 10 years. Scotland and the Channel Islands can be an issue for the majority of lenders. There are lenders that will lend in Scotland and on the smaller islands and on the Channel Islands, but it does drastically reduce the number of lenders in market. If you have a property with multiple units on site, that again causes a dropout in the number of lenders we can go to, but multiple units either within a block or within a agricultural property can be catered for. If you have a property with multiple units on site, that again causes a dropout in the number of lenders we can go to, but multiple units either within a block or within a agricultural property can be catered for. Flats above commercial. There's another point that it usually causes issues for lenders. However, let's take the scenario of a souvenir shop in a holiday hotspot with flats above. They are mortgageable. Lenders can get comfortable with the commercial use downstairs, but it does cut out the number of lenders that we can go to. So lenders use 3 different types of affordability stress testing to ensure that you can afford the mortgage repayments against the holiday let mortgage that you intend to take out. The first is a forecast-based model, and for that you would need to contact Sykes to get the forecast of your low, medium and high seasonal rates, weekly rates, and lenders would take an average of those low, medium and high rates and use that figure as part of their calculation of how much that property would generate in a typical year. Often they're working to 28 weeks as being a typical year. Some lenders would say 26 weeks and some lenders would say 36 weeks, as much as 36 weeks. The other model is often used in a remortgage scenario where you are actually looking at the actual revenue that a property has generated over the previous 12 months. And you're making allowances for around 20% of overheads and costs with booking fees, etc. And that net figure is then used as part of the affordability stress test. So rather than being a projection where you're working on 28 weeks, you've got the actual revenue minus 20% for costs. And the third type of affordability stress test is AST income, or assured short hold tenancy. So this is assuming that the property is just let for family use. It's not let for holiday use. And what would that property yield if it was just let as a normal tenancy arrangement? That figure is then used against the interest repayments against the loan. So there is no deduction made, it's the actual AST, the gross AST income that's used against the interest-only mortgage repayments. So the criteria used to stress test a mortgage in a new purchase scenario is quite straightforward. You would contact Sykes and obtain a forecast of the low, medium and high seasonal rates for the property in question. So let's take some worked figures to demonstrate how a new purchase would be stress tested by a holiday let lender. So let's assume that we're going to stress test a new purchase holiday let scenario from a lender's perspective. You would contact Sykes to get your forecast average weekly rates for your low season, your medium season and your high season. Let's assume that you've done that and you've got some figures and your low season is £850 a week, your medium season is £1,300 a week and your high season is £1,700 a week. The average weekly rate would be £1,300 a week. Now lenders would take that weekly rate and times it by the number of weeks that they expect your property to be let for. Typically that's 26 weeks, but that can be as high as 36 weeks with some lenders. The average is around 28 weeks. So let's assume that £1,300 is going to come in over 28 weeks. That's £36,400 in projected revenue. So let's now apply that to a mortgage scenario. Here we have one with the Vernon Building Society. They currently have a rate in market as of today of 6.19. To stress test that mortgage for affordability purposes, lenders would add a further 2% to that mortgage to account for any future rate rises that may take place. So that rate now becomes 8.19. Let's assume that you're borrowing £300,000 against a £400,000 property purchase. So the calculation would be 8.9% at over £300,000, which is £24,570 per annum. So lenders then require, that's your interest only base servicing costs, and lenders require you to have an income level that's 25% or even 45% higher than that. So some lenders will say that if you're a lower rate taxpayer, you have less overheads in terms of tax, and therefore we can stress your rates at 25%, or if you're a higher rate taxpayer, we may look for 45% cover. So in this scenario, we have 125% of 24,570, which equals £30,712. That is lower than the 36,400 that came out of your projection calculation, so that is a pass. If you were stress testing that mortgage against 145% cover as a higher rate taxpayer, that would be 35,626, which again is lower than the 36,400 projected revenue figure. Again, that would be a pass. So a full 75% mortgage could be obtained against that property using the income figure. So how can I build and grow my holiday let portfolio using finance? The successful holiday let investors that we work with use a strategy called the BRR technique. That stands for buy, refurbish, rent and refinance. And using that technique, you can take a single pot of funds and roll it through many property purchases to build your portfolio. So let's take a scenario where you have a 25% deposit, you have a contingency for some buying costs, and you perhaps have some cash as well in reserve for the refurb costs. Although you don't absolutely need that, that can be borrowed as part of the bridge. So in this scenario, you would put your 25% deposit down and you would get a bridging loan for the remaining 75%. You would then complete the refurbishment on that property, taking it from perhaps a dilapidated, dated property into something that's attractive from a holiday let perspective. You can fund the cost of those works on a bridging loan or you can use your cash. Once the property is let and producing an income, we would arrange for a valuer to go out and re-inspect that property. Hopefully you've added significant value to that property. You've increased not only the aesthetic appearance of the property, but you've also increased the rental income against that property. Sykes would also confirm that with an increase in the forecast and with the property in its new condition. The lender would then return a higher value, and we can use a term mortgage provider to exit that bridging loan, and if the values are high enough, return all of your initial money, your 25% deposit, your buying costs and any refurb costs that you may have entered into that property. That will allow you then to go on and find the next property and repeat the process. We have clients that are using that strategy to buy and refurbish and exit the property every 9 to 12 months, which means that at the end of a 36-month period, you may have completed 4 properties. When you get to that point in time, the original property has now been trading for over 2 years and has increased in value. So yes, you can go on and buy property number 5, but you can also go back to property number 1 and release some more deposit funds to enable you to buy 2 every 9 months rather than just 1. And the growth of the portfolio can be exponential from there. So that's how you take a single source of deposit and roll it through multiple properties to build your holiday let portfolio. So it's now a good time to invest in a holiday let property. My personal belief is that this is one of the best times to buy since the 2008 crash. At the moment, we have the perfect set of criteria, which is vendors are looking to sell and motivated to sell, and we also have a falling interest rate environment with lots of lenders looking to lend. Therefore, you have access to funding and you have motivated vendors. If you have those 2 things, you can usually acquire property at below market value and be ready for when the market returns to health, and you can make a greater yield on your investment because your entry cost has been lower than it would have been. So now is a great time to invest. The funding is there, the properties are there, and you just need to have the confidence to go ahead and take that step. One of the services that we provide at B2B Finance is an appraisal of a potential property purchase. So we'll work with Sykes to get the projected income, and we'll compare that against the servicing cost from a mortgage perspective for you. So you can calculate your net return on investment, and we can do that multiple times until you find the right property and the right set of circumstances for you. So my advice is to be confident, research the market, visit properties and make offers. Those offers can be subject to finance, and if you find a vendor where you feel like you've got a good property at a good price, you can come to B2B Finance and we'll calculate the cost of the finance required against that property. You can also visit Sykes, who will help calculate the projected income against that property, both in its current state and perhaps in a refurbished state. That should give you the tools that you need and the confidence you need to go ahead and complete that transaction. We work exclusively with Sykes Cottages, so if you have any further questions, contact them and we together will get you where you need to be.
So I've had a number of inquiries from Sykes, some of the key ones that I would like to go through with you. I've had a contact that came to us via Sykes, having been to see a property, but the property was not yet at the level that Sykes would actually want to take it onto their books. The lady concerned was really wanting to purchase this property. So she approached us and asked if there was any way we could assist. What we were able to do was arrange a short-term finance for her in order to undertake the works needed and get the property ready for the refurbishment, which would then mean that she could then move the property to Sykes. This was done in November last year, and having spoken to her this week, the works will be completed next week in order to go live with Sykes from May. Yesterday, I had a call from a client who was looking at purchasing a property in Cornwall. They had gone to a standard mortgage broker available on the high street. Unfortunately, they'd been unable to source a holiday let mortgage for them. Having approached us via Sykes, we were able to prepare an application, submit it, get an offer in principle on the same day, and the valuation is now booked for tomorrow, enabling them to now pursue their dream. So a client has contacted me based in Northumberland and has advised that she has recommended me to 4 other parties who are looking to purchase a property via Sykes. She was delighted with the service, the speed, and what she also said was the clear, concise advice she received, and felt it was a very easy process to navigate.